Hello, everyone. I'm Matt Clark, research analyst with Money and Markets with your weekly Bull and the Bear podcast. Now, if you aren't already, I do want to make sure you are subscribed to our YouTube channel. You'll find a lot of great features with Chief Investment Strategist Adam O'Dell, Green Zone Fortune's co-editor Charles Sizemore, and myself each and every week. We've also created a new membership program on our channel that gives you exclusive insight into the cannabis market, includes stocks, interviews, news, and so much more. You can just click on the join feature on our YouTube homepage and find out much more about that. And I'm going to jump into today's podcast. I'm going to admit it right off the bat. This topic today is not very sexy. However, it is extremely important to understand no matter what level your investing is, whether you are a beginner or a seasoned investor, these are things that you have to pay attention to. So while it might not be necessarily the most sexy, it is very important, and it's Treasury yields. Now, I know, hear me out just before you kind of roll your eyes and all that, just wait. Yields do have a strong role to play in the market. Higher yields of Treasury bonds typically make it more expensive for companies to borrow money. They also signal to investors that rising rates could move capital out of the market, causing a bit of a market downturn. Lower yields traditionally have the opposite impact. It doesn't always happen that way, but traditionally that's kind of how it plays out. And I'll get to that here in just a second. One of the biggest economic benchmarks in the U.S. economy is the 10-year Treasury yield. This is the one that you hear quoted across news channels and financial experts and all that. They always use the 10-year Treasury yield. When the yield rises in the 10-year Treasury, mortgage rates and other borrowing rates also go up. Now, a drop in the 10-year yield also comes with a fall in mortgage rates, which has a positive impact for the broader economy. Now, if we look at the 10-year Treasury yield, it hit a high point of 1.74% back in March. That's the highest since before the COVID-19 pandemic in 2020. From July 19th of 2021 to August 12th of 2021, the 10-year yield jumped 17 basis points to settle at 1.36%. That's still 38 basis points lower than the prior high in March when bond yields collapsed and the market rallied to new highs. Now, in the last 2 weeks, we've seen the yields bounce up 14%, but down only 7%. So the highs are high, the lows are high. So why are they going up? Well, one simple explanation is inflation is moving higher. From October 2020 to July of 2021, the consumer rate of inflation has gone from 1.3% to a whopping 5.4%. What's more is that the current rate of inflation has held steady for the last 2 months. Now, we don't have August figures. We won't get those towards the end of the month. But in June and July, 5.4% was the consumer rate of inflation. Now, higher inflation could lead to higher yields, thus a potential move out of equities as capital could be shifted out of the market. Now, higher yields also have another thing, but I'll get to that here in a second. But one other thing to look at here is the spread between the yields of the 10-year Treasury and the 2-year Treasury. Now, by the end of March of 2021, the spread between the two yields was about 160 basis points, its highest spread in about 3 years. Good news for the market. And of course, we saw that as markets reached new highs. In mid-July, however, that spread dropped to below 100 basis points and is hovering in that range even today. If that curve does not grow wider, it could spell a slowdown in overall economic growth. One prominent market maker has actually put a lot of money on a bet that the yields are going to rise. Michael Burry. Now, if you're familiar with the film The Big Short, Michael Burry was the subject of this film. He released the SEC filings for his company, Scion Capital, and that report indicated a significant short position in the iShares 20-plus year Treasury bond ETF, which tracks the performance of long-term bonds, obviously 20-plus years. Now, essentially, Burry, who accurately predicted the housing market crash in the 2000s, is betting that inflation is going to continue to go up and investors are going to move out of bonds and into other safe havens like gold or cash. And Burry did this with a put option on the ETF, which is an even bolder move. Now, does all this mean that it's a signal of a market correction coming? It's certainly possible, but as we've said before, no one has a crystal ball. And even with fluctuations in the bond market, equities continue to rise, at least until recently. And here's where things get a little sticky. You've got global events like Afghanistan. You have the resurgence of the COVID-19 pandemic, which we've seen all over, including here in Florida. And bond prices all factor into where the market could be heading. We've seen that earlier this week. The market retreated from its record highs as we saw issues globally, a resurgence in the COVID-19 pandemic, and bond prices. All these things factor in. So it's not just one thing, it's a combination of a lot of things. Now, I suspect Burry may be onto something and that bond yields are going to continue to go up. Now, but does that mean that the stock market is going to have a big correction? I think things are setting up for it, but I can't say that with certainty that it's going to happen because the stock market seems perfectly content, at least for the time being, of letting it all happen without much ado, simply because we've seen inflation go up, we've seen bond prices go down, we've seen a lot of things that would normally spell have an indication that the market would be correcting itself. However, that hasn't happened yet. It's starting to, but whether that's long-term or not is hard to say. So for now, as an investor, probably safe just to stay put and not make any rash decisions. If you want to maybe move out of bonds and into cash or other safe havens, that's probably okay. But in terms of your actual equity portfolio, probably don't have to make a lot of changes just yet. We will see stronger signals of a market correction is coming. Right now, they're just not lining up to see that. Now, Burry, like I said, maybe onto something. I think he's probably right. I think bond prices are going to go up. It's just a question of how far, how fast, and how long. Time will tell. Now, I do want to look at our latest poll results on YouTube. Last week, we asked the audience if you have or considered taking CBD for medicinal purposes. And this was in relation to a marijuana market update video that I did on the psychedelic and cannabis market forecast that I had coming up for the rest of this year. And you can see that on our YouTube channel. The overwhelming majority, 70% of you, said that you do take or would consider taking CBD for medicinal purposes. Only 26% said no, and 4% wondered just what CBD was precisely. And Brian commented on our YouTube page, the side effects I was getting from the medication I was taking to help me with anxiety and sleep was crazy. With marijuana legal in my state, it's a more natural medicine without all those crazy side effects. Haley also commented, in school for cannabis now, CBD is very effective, doesn't get you high, and there are no harmful side effects. So shout out to nature. Interesting call out, Haley. Kristen said, I haven't, not certain science supports its effectiveness yet. I did give CBD drops to my dogs, but didn't see much of a difference. I've always been interested by the fact that I go to a pet store and I see CBD and hemp products for dogs. I have always found that really interesting. I don't know what the science is behind that, but I just find it interesting that they actually market that and people buy it. So I'm not sure if Kristen's experience is broader or if maybe it's just a one-off. Who knows? I don't really know how that works. But I think the cannabis CBD market has experienced, and psychedelics, they have experienced a bit of a downturn. There are some headwinds. Legalization is kind of facing a stall in Congress. And you can get more of these insights on my marijuana market update, which you can check out here. You can check it on our YouTube channel. Now, we put these polls up every week. I do want to thank everyone who voted and commented on our poll. We do it every week. Love the interaction that we get. Try to use as much of that feedback as possible. So make sure you check out our YouTube channel and participate in our poll whenever we put that up. Sometimes Thursday or Friday is usually when we get that up. Give you plenty of opportunity to jump in and have your say. You can also check out a new video series, Ask Adam Anything. I get to sit down with Chief Investment Strategist Adam O'Dell and ask him any question you like. You can do that. You can get your question out there by emailing us at feedback@moneymarkets.com. We also use questions for our new series called Investing with Charles, where I sit down with Charles Sizemore, Green Zone Fortunes co-editor, and talk about the broader market and look at economics and really boil those down to a simplistic tone, as well as looking at retirement and dividend and all those types of things that earn you income for your portfolio. And we've launched a new membership community on our YouTube channel, gives you exclusive content related to our cannabis market. And again, if you're eyeballing the snazzy hat, which my boss says I should probably start wearing, and I did for this video, you can actually get one like it or a couple others that we have. If you submit a video of your question or just a question to feedback@moneymarkets.com and we use it, we'll make sure we send you a hat, maybe some other cool swag for Money and Markets as well. Again, that email address is feedback@moneyandmarkets.com. So make sure you send that. If you send us a video, that's great. Would love to see your videos. If you have a testimonial, maybe you're following us and you like what we have to say, or you disagree with what we have to say, that's fine. Email us a video of it, and we'd love to put that out there for the huddled masses. Also, head over to moneymarkets.com, sign up for our free daily e-letter. In it, we give you safe, sound, smart, simple, profitable investment information each and every day of the week for free. Until next time, this is Money and Markets research analyst and host of the Boulder Bear podcast, Matt Clark, wishing you all safe trading.